try to explain quickly the accounting equation for you. Okay? So, first of all, you should know that the accounting equation is assets equal to owner's equity plus liabilities, right? And now, basic accounting equation, we are going to find all what accounts are all in one transaction, right? Like what accounts were affected in this equation. And when doing accounts, now there's always going to be two that go hand in hand. So one will be debited and one will be credited. And look here, there will always be an asset that will go hand in hand with either one of the two. Always. This one alone on the equal sign, because asset equal to owner's equal to liability. So there will always be an asset that goes with either owner's equity or liabilities. Okay? So anyway, we are gonna look here. Both goods on credit from consumer for 4,000 rand. Now what we're gonna do is we're gonna circle our keywords. First of all, you can write maybe a rule like this or something, and then you ask was something right, was it bought or sold? You ask yourself that quickly. In this case it was bought, right? Okay, so we bought goods, and then you ask the payment. Basically, what did we buy the goods with, right? Okay, so we bought goods, right? And what did we buy it with? We bought it on credit. Okay, and now you should know that as a business, when we buy stuff on credit, right? Okay, whenever we buy something on credit, it makes you ask yourself, who gave the credit, right? It will be them that gave the credit. Sky Schumann, we bought stuff from him on credit, meaning we're gonna owe him back. Okay, so whoever we owe back is the creditor. Okay, whoever gives the credit now. So once again, if you are a creditor, you basically give credit, right? And we owe that person back. Okay, and a debtor, if you are a debtor, you are in debt, right? You owe the money. No? So a creditor basically is the people we owe back him, however. We're gonna owe them back, right? And a debtor, they are the one that's gonna owe them. They owe the money. So if you are in debt, you must pay the money back. In this case, we bought goods on credit from consumer. No? Now you're gonna ask who gave the credit, okay? Who owes who now? If we bought it from him, it means he gave it, right? We bought it from him, meaning we took goods from him. We must pay it back later, which means as a debtor, right? But now we're gonna record his name, of course. We're gonna ask. It's more not record his name, but like we're gonna ask more. What is he, right? Because in a CRJ, for example, when we receive money, we don't record our names. We record the person who gave us the stuff. So, for example, let's say, Kai Schumann, he bought rent by us, for example. We're gonna record his name there in the details, so not ours, right? And so we received money from WA. We're gonna record WA's name by the details, right? And so also for a cash payment journal, when we pay out money, we put the payee's name there. We paid Big Blues, we put the person we're paying there, right? So it's more of who's in this transaction. So we bought goods from Kai Schumann, right? And now you ask first, who is he? Is he either, when you see the word credit, you ask yourself, is he a creditor or a debtor? It's either those two, right? In this case, he is the creditor. He gave us credit. We bought goods on credit from him, meaning we're gonna owe him now, right? He gave the credit basically. Okay? So now you should know that he gave the creditor. And that means it is creditor's control. Okay? Okay. So you're always gonna, it's either between creditor's control or debtor's control. Okay? And the reason it's creditor's control is because we bought stuff on credit by him, right? He offered us the credit. It makes him a creditor. And if he is a creditor, it's creditor's control. And say, for example, he owed us, he's a debtor. It's going to be debtor's control as the account, okay? Because we're going to have to use, like, accounts in the accounting equation, right? So, in this case, and now we find out, like, what was bought or sold, basically, no? It was the goods. What is the correct accounting term for goods? Trading stock, right? It's trading stock. Now, we know that, okay, goods were bought, no? That's your first account. And what was it bought with? Credit. Credit is control now, no? So we owe him money, right? We first find out it was on credit. Is he the debtor or a creditor? If he's a debtor, debt is control, meaning he owes us debt. If he's a creditor, credit is control, meaning we actually owe him, right? He gave us a credit, so we owe him money back. Okay? So here in this case, bought goods on credit. So we bought goods on credit, meaning we're gonna owe him back now. He's offering the credit, so he's a creditor. Okay? And because the creditor, we're using the term creditor's control. Okay? And now we must draw a T journal for each. First of all, you ask yourself, in the accounting equation, right? Is trading stock assets owners equal to a liability? It's an asset. Okay? You must go through your accounting equation in the classification of accounts to know that. And for every journal, debtors are side and creditors are side, right? Okay. And now you ask for assets, right? Where's the increases and decreases? You should know always for an asset. The debit side is increased, credit side is decreased. And for every other account is vice versa, right? So for all assets, the debit side is the increase, credit side is decrease. And then for all the opposite ones, it's the like vice versa. The debit side should decrease, credit side increase, debit side decrease, credit side increase, right? It's only assets that is debit side increase and the credit side you decrease, and then everything else is the opposite, right? Okay, now you ask us, so we now know increase here, decrease here. We also said our trading stock increased through this transaction. Let's check. We bought goods on credit from consumer. Okay, we bought goods meaning we received more goods. So yes, it actually increased, right? So because now we have more goods now, we bought more. So it will increase on the debit side now by trading stock, right? It's gonna increase how much we paid for? 4,000. Okay. So we bought goods for 4,000 rand. That's what we paid for those goods, right? And credit control. What is it? Assets is equal to a liability. It's a liability, right? And the reason why it's a liability is because now we are in debt. We owe him, right? We bought goods on credit from him, from a creditor. A creditor is somebody that you owe money to. No? And if we deal with credit control, it's a liability because now we must pay him back. We bought goods on credit by him, meaning we took now, pay it back later. So now we must actually pay him back, okay? So that's why it's a liability now. We owe people money. Now for liability, it's the opposite of a the increase and decrease by an asset, no? So here by liability, debit is decrease, credit is increase, okay? Now we ask us, did our credit control increase or decrease? We look here, bought goods on credit from consumer. You might think it decreased, but it increased. Listen here, we bought goods on credit, meaning our credit increased now. We're gonna owe him more. So the more credit we basically take, the more we're gonna owe him, right? So our credit control increased with how much? 4,000 rand. Okay, because we owe him more money now. And now that we got this, we go to our tables, right? And now you look between those two accounts, which one was debited? Which one was recorded on debit side? Trading stock, okay? So the account debited is trading stock, right? It's trading stock. And then you see, okay, now between these two, which account was credited? It is the credit control. Can you see it's on the credit side? No? And then here, you put the account credited will be creditors control, okay? And now you must ask yourself, right, was our assets here, was it ever affected? You ask which one is an asset? Is an asset here? And you will see, yes, it is. Trading stock is an asset, right? It's an asset. Trading stock is an asset. Now you ask, how is your assets affected? Let's check here. It increased with 4,000, right? Because we bought goods, so now we have more asset, we have more trading stock, right? And now we ask, was our owner's equity affected in any way? You look here, trading stock, credit control. None of them are owner's equity, right? None of them is an income or expense or capital or drawings, right? So owner's equity is 0. None of it affects it, right? And then liabilities. Credit control is a liability. Was it affected in any way? Yes, it increased with 4,000 rand because now we owe an extra 4,000, right? And now also check. So that's how you do that part, no? You see which accounts debited, credited, and what was affected basically there, increased or decreased, right? And now also to check if you're right, there's the equation asset equal to owner's equal to liability, right? Now on the one side you must put your assets. Your assets was plus 4,000. Sorry, it's blurry. Your assets was plus 4,000, right? So plus 4,000 on your asset side equal to owner's equity was 0, liability was also a plus 4,000, okay? And then you'll see, leave the 0 out. You see, plus 4,000, it's equal to plus 4,000. So the asset side should always equal to this side. And if it is equal, then you know what you did was right, okay? You see here, your assets on the side, liability on the side. So yeah, and that's how you do an accounting question.